Hello everyone, good morning, happy new year and welcome to 2026. We had an amazing holiday, I believe. How have you been? Good morning, good morning, good morning. So yesterday we, came back to the usual business, looking at what the market has to offer, and we'll just be continuing it from there. Today we're basically looking at commodity currencies first. So AUD USD, NZD USD, and USD CAD will be the first things that we look at before we proceed to now take another look at indices. So if you happen to have any question at any point in time, please do well to just let me know by leaving it in the chat box and I will attend to it. Okay, so what do we see this market doing? What does it have in store for us today? Using our all-weather strategy, which is indicator-based. So please, if you see this indicator looking a lot, don't get confused, please. Just pay attention to the price point that we'll be looking at and then, look at that on your naked chart. So NZD USD on the H4 time frame, what am I seeing this asset doing? So we're seeing this predominantly the trend has been downward for a while. This red indicator being a trend line, and then price bounced into the pullback, but as expected. Now, the next level where price is expected to trade into or find resistance is somewhere here. This is the H4 time frame, around 0.58460. Price will keep buying into this level, find resistance that will now continue the predominant trend that we see happening here to continue selling. However, paying attention to what price has been doing since sometime around November, let us go to H1 so you see a clearer picture. You see on the H1 time frame now, this looks like it is more to the upside. Price came, it sold, it looked like it was going to take this point out, but it failed to do so. If price had broken through this level, they would have said, okay, you're showing signs that sell starting to resume. However, price came, bounced into the support and started to buy. Now we've now seen a change of character somewhere around here. No confirmatory break of structure, but it is giving signs that there's more room for NZD USD to buy a bit higher before we see any continuation in either direction. So back to the H4 again, so you don't get confused. I'm saying the predominant move is looking to the downside. Price came to hit resistance here at some point, it sold. Did this hit support, currently buying, and I'm saying that since it is already buying, the next likely area where it is going to buy into before it hits another resistance will be 0.58460. Now, if price comes into this zone and breaks above this resistance level, then we know that there will be more buying pressure for NZD USD. Look at this side for liquidity. Remember, price does not move based on vibes. And this is the thing with the FT4 chart. You can't easily backtrack like you do on TradingView. But I'm looking at this and I can see there's a fair value gap between this candlestick. There's a fair value gap somewhere around here, although it looks like price already tapped into it. Go back and see. So that I'm sure I'm looking at the right thing. This is where I drew that line, right? So yes, look at this tiny fair value gap somewhere around here. If you draw it into today's price movement, let me put this horizontal line so it is easier for us to now see when I zoom out. See that price has not tapped in. Price has not tapped in. Please don't get confused, but I know the indicators can look like a lot. So yes, there's a fair value gap here that could now attract price. So if this zone gets taken out, NZD USD will be targeting 0.59460. However, if this resistance level holds, we're going to be seeing more sell pressure that would eventually come to take out these other structure points downward here and eventually target the other liquidities, the diagonal liquidities, the FVG, and even down here, come and target it eventually. Right, now that's the bias for NZD USD. And then for AUD USD, AUD USD on the H4 time frame, this has broken through what could have served as a resistance point. So it broke through, sunshine has been printed. We're expecting one or two things, a retracement or a reversal. So because sunshine has been printed, I'm expecting a temporal sell of AUD USD, but a sell into what zone? Into this possible area. Let me go ahead and take this off. Right, so into this possible area, one, so that's not POI, 1 point of interest, 2, and point of interest 3. I want to see what price, eventually does around this level. And if you're going to start selling, this will be the next level where you find support 0.66911 or 0.66675 or 0.65926. Now, because this has clearer POIs, I'll go ahead and mark out my level point on the M5 time frame. What are they? Yesterday's high, marked out into today's price movement. Day before yesterday's high, yesterday's low, all marked out into today's price movement. Now I'm just waiting. So for NZD USD, I'm expecting a temporal sell, come in here, trade into the zone. If I see any confirmation pattern, I take a buy. If this does not hold, there will be no confirmation. We'll see even break other breaks into the next point of interest, the next. That's basically what this POI is served for. And then finally looking at USD CAD H4, what am I saying? So this is a zone that we marked out from one of our previous analyses where we said price was going to trade into and sell from. See how beautifully this play, right? Okay, now that has happened in the past. We're looking at today moving forward. How do we make money from those markets today? I'm drawing all of this downward, so this is not our current concern. All of these horizontal lines are not what we're looking at right now. So USD CAD predominantly to the downside, structure was broken repeatedly, sunshine printed, so this sell was expected. However, USD CAD has now sold into what can serve as a support on the H4 time frame. This can serve as a support. That will now be 1.37338 going to H1. What am I saying on the H1 time frame? Same thing. So that support is valid. So price has sold into this zone. If you come and trade in here and find support and confirmation patterns, we're looking at USD CAD buying into the next point of interest, which is 1.38826. This is the H1 time frame, so it's take a while. Let's go on M5 to mark out even more recent points of interest. What are they? Yesterday's high and low, like I did for the AUD USD just now. The same repetitive pattern is what we're doing. There are about 3 confirmations now or confluences on this POI 1.37338. This is the H1 horizontal line, 5-minute trend, and then yesterday's high. Mark out this as well. So as USD CAD for come here, there's a very high chance this one is going to hold. Give me a support, and I'll take a buy of USD CAD from here, targeting the next level, which will be somewhere around here. That's the next resistance point. So this is pretty much what I am looking out for today. Let's take a quick look at Forex Factory. What are the high impact news releases that we're looking at today so that we are not caught off guard? So today is the 6th of January, Tuesday. I believe you can see my screen. So today is a very quiet day, very slow day. All of these are low impact news releases, and the only medium impact we have happens to be on Euro. So the only time we're going to be having high impact news releases that affects the asset classes that we just looked at now is tomorrow, where we have CPI month on month and year on year coming out, and then we have JOLTS job openings on the dollar, ISM services PMI also on the dollar. Now, to see how this will impact the market, you can go on Forex Live and see more detailed breakdowns of how this would impact the market, and then you know what to do with the correlated asset classes. Now, clicking on this folder basically tells you what the CPI news measures. You can see here, what is it measuring, what is the effect. So if the forecasted is 0.1% and the actual, which is what we're waiting for to come out, if it comes out greater than forecast, then we're going to be seeing more strength going into AUD, right? So what now happens for AUD USD? We'll now be looking at even more buying pressure going into AUD USD. Except we now happen to have another strength come into the dollar, then you will now see them either ranging or pushing upward so much force, right? So let's see how this plays out. If you have any question at this point, please do well to ask me and I'll answer them before we take a short break to now, come back to conclude looking at indices. Hi, Mr. Samuel, Mr. Wonko, Mr. Safa. Let me know if you have questions.
Good morning.
Good morning.
Yeah, this indicator there is in your chats.
So sorry, kindly hold on. Okay, I wasn't hearing you clearly. Could you try to be more audible, please?
I said the indicator on your chat was.
Okay, so these are indicators that we use at the academy. They're mostly for students of, the VFT Academy. That's why I said I understand that not all of us would have the indicators. These are moving averages basically that we have put together to be able to use to tell the story. So not everybody may be able to will have that. Not everybody would have that. This is for VFT students. So if you happen to take the Forest Bootcamp course, you gain access to it automatically, and then you can look at the market with it as well. But the indicators are just what has been mathematically calculated to see the same thing that you'd ideally see using your naked eyes. But in this case, now you're not zooming in, trying to look at candlesticks, trying to see where there was an order block, where there was a fair value gap. These indicators do that. So what you just need to look for is what you've been taught, looking for the POIs, which could be the momentum, the pullback, If you now sit down to say you want to study how the indicators work, you see that they are in correlation with naked charts. But because I wouldn't want to cause confusion, then I wouldn't be mixing and merging. But you'd notice over time that when you draw certain levels out as POIs, even if you're using naked charts, it should be similar levels that you'll be drawing as well. Hope that answers your question, sir.
Okay, no problem.
All right, sir. So without taking too much more time, let's go on a very short break. And then we'll come back to wrap up this morning's session with a look at indices. So please don't go anywhere. We'll be back very, very shortly. Cheers and God bless.
Hello, everyone, and good morning to you all. Welcome to today's market color, where we look at the US market, and then, of course, we've looked already at the commodity market. Happy New Year from me, Demola Global, and of course, from everyone on the team. How are we doing? Hope our year is going smoothly. It's beginning to, align with what we want to do. Ashafa Sheung, morning to you. Mwoko, David, I believe I got that pronunciation well. If I didn't, apologies. And Samuel Clement, hope you're good. Hope you are fine. Hope everything is going well with you. All right, very quickly, we'll be looking at the US market. For those that are on the market yesterday, that checked the market, you see something very interesting happened. Really, really interesting happened. Of course, that was as a result of our president, number one in the world, not Tinubu now, but Trump, right? The attack on, or not the attack, but let's use the attack on Venezuela. That's a better word. And we saw what that did to the market, and Wall Street was excited about it. And then we saw it pump. Venezuela, they're primarily an oil producing country, sorry, and they have starch of resources, commodities, that's gold reserve and the rest. So especially the crude oil market was really excited about it, reacted positively to what happened, right? And then with the incoming attack also that might go to Colombia and the rest. So the market is really interested in what Trump is doing. At least if they didn't say it verbally, but from what we're seeing on the chart, right? And then it aligns very correctly with technicals, right? Because it's like a box pattern kind of on the higher time frame, on the 4-hour time frame, right? If you look at it on the 4-hour time frame, it begins to get clear, right? There's a sweep here, a sweep, it breaks the upside and price came back, tapped into the other block, fair value gap, and then quickly delivered. Yesterday was really, really significant. Over 1,000 pips, if I'm not mistaken, was made from this market. Yeah, 1,350 pips in just 2 days. Really interesting, right? Really, really interesting to see. Okay, let me delete that. All right, so what do we have for today? What do we have for today? The market has broken structure, guys. The market has broken structure, which is this zone here. And a break of structure implies that what would see probably a tap into this zone. There's an order block here. There's an order block here that's not been mitigated before. What will I be looking for? I'll be looking for engineered liquidity, right? And what is an engineered liquidity? Sorry if those terms are beginning to confuse you. Let me just explain it. There's no form of inducement here that would say price will come and take us out and then take this guy out, then use this guy to go up. So instead, what will we be looking for? Let me delete this. I'll be looking for price to do this, do something like this, and then something like this to the upside. Then what will happen now? Boom, use this as engineer liquidity, come into this and then continue, right? A form of engineer liquidity here. So that's what I'll be looking out for if peradventure price wants to come back into this zone. And only God knows where we are going from here, because this is like an all-time high, 49,000. And so you might go the next level that makes sense is not even 50,000 but 55, right? 55 or 60 using quarter point theory. So we're looking at 55,000 as the new level where venture price continue to push, very, very massively like we have now. All right, so that's what I'll be looking for.
Pick now.
Hello. Were you saying something? Okay, yes, probably it's a mistake. All right, on US30, that's all US30. Let's move to US100, which is our NASDAQ. NASDAQ didn't push that much yesterday. We didn't see that much of a push, right? This is quite really, really interesting. This kind of like a what? An engineered liquidity. This zone here, break of structure, price came back, cleared it, and then it's now pushing up from this other block, right? And then where will be my natural target for this guy? This will be the first one here, and then the second one will be ultimately this zero, right, as my second target, to clear all of this eyes that we have here. All right, and to clear all of this eye that we have here, let me look at the 1 hour time frame. Probably we can see some levels to enter from. No, there's no level yet for us to enter this market from. There's no level yet, and that we can enter. Let me look at 45 minutes. Okay, all the level has been exhausted. The only guy that looks as though it has not been exhausted is this, right? This lower zone, and there's no break of structure of this that would give me the confidence to take the buy from this zone, right? So if I peradventure wants to buy, I will wait for this to be broken. But price breaking this also means that it might not necessarily come back to enter this zone and then just continue, right? So if you missed yesterday trade, it's as good as just let it go, right? Another opportunity will come. There's no point forcing this particular opportunity, because as it stands now, the best way to have entered this market have been from the zone, this exact zone here, right? That would be the best way to have entered this market. However, many things happened, right? You're not on the chart, something, you missed it, then you just have to let it go, right? Because where price is now is the middle of nowhere. So you don't want to take trades from that place. Because we can still see a form of coming back into the zone and then going up again. So there's no point being unnecessarily being stopped out in the market. Also almost the same thing with the S&P 500 too, in the market, right? On the daily time frame, that price, tap into this zone and then is going to create new highs. And on the 4-hour time frame, price reacted from this. Necessarily, I can't seem to find why we saw that reaction from this zone, because I mean we have a very good zone here, but then it makes sense now why price couldn't react off from this zone. We didn't break this structure. There could have been like a proper engineered liquidity like I showed us and what we're expecting for US 30, but we didn't break the structure zone. So for that reason, most likely we just have to react off from this. So now if I'm going to take any trade, I want to mark out the zone. Not on, excuse me, okay. All right, so mark this entire zone. Okay, if I want to take any trade now, I want to take it from here. Why? Because now we have like a form of engineered liquidity, right? A form of engineered liquidity, like I explained to us. Where's the engineered liquidity? We have something like this, something like this, something like this, and then a break of structure, right? And then the price coming back to take all of this out, and then continue our movement, right? So we have like this coming. So we have like a form of this happening, right? And then because of course this is a very good zone already. This is a discount level. This is a very good zone, a discount level. Use my plan to exactly. It's a discount level, and then we expect it to push even further to the upside. Only God knows where it will push to, but then let me do 1:4. Okay. So this would be like my setup for the week. Price coming into this and then continue the movement to the upside, right? And this is just me being protective of all my lows, possible lows. If I want to do a very tight SL, then we'll be looking at 1:6, 1:7, right? But then for the sake of, let's allow the markets, excuse me, let's allow the markets, allow margin for error. So we can as well expect this to happen, and then we continue the markets, continue this buy to the upside, right? On the daily, let me see. Okay, all right. So this makes sense for us to see in the market, and we don't 2-hour time frame. Are we missing anything? No. 3-hour time frame, missing anything? No. Okay, I think this is a very valid setup for us to take a buy in this market. Everything is pointing to that direction. So it makes sense for us to take a buy in the market. All right. So that's basically what we have going on today, except anything changes significantly. But that's what we have going on today. Do you have any question, addition, subtraction, Ashafa, David, Samuel, any question whatsoever, so that we can quickly answer the question, and then we'll look out for New York for the recap of all of this that's been done or been mentioned. All right. In absence of no question, thank you so much for joining. Thank you for joining. We'll meet again by 2 p.m. this afternoon, where we just look at what the market has done. Hopefully, we have been, price has stacked us in, and then we're in massive profit already. All right. Again, Happy New Year. Wish you a productive trading year, more profit, bigger wins, scaling up your portfolio. And then also be reminded that we have automated solutions for those not in Nigeria, for those that have a very busy schedule, professionals, 9 to 5 hours. You have a solution available, both through TA and then Falcon, right? Through TA does about 7 to 15% in a month, while Falcon is on the high side. We've seen upwards of 40, 50%, even 30 in some cases, right, on a monthly basis. So if you're looking to have something like that for yourself, or you know somebody that would be interested, just do well to send us a DM on our WhatsApp line, Instagram, or any from even Facebook. We're going to respond and then get that done for you. All right, that's pretty much it. Thank you so much for joining this morning. Again, I wish you a profitable trading day. Cheers and God bless.